Welcome to Pioneer Mindset, a place where we challenge our mindset and address the discomfort in both business and life by finding clarity resulting in bold conviction. I'm your host, Garrett Ruskamp, fifth-generation farmer, husband, and father from rural Nebraska. Whether you're navigating frustration from past decisions or worry about the uncertainty you face today in your business, we're going to learn from our struggles and take on new challenges with a resilient mindset. Join me as I share my journey of struggles I faced in agriculture as a farmer and family man. I'm ready to dive into honest conversations to tackle the mindsets surrounding key issues that rural ag business owners face that will ultimately help you gain control, leading to a profitable and sustainable business. Let's adapt to Pioneer Mindset and get to it. This week's episode of Pioneer Mindset. Excited for another guest episode this week. Kind of build upon the previous episodes and continue this pattern, talking to some different individuals in the industry. Really excited to bring Zane Abner back on from Tredas. Zane's been our most occurring guest. He provides a lot of value on the marketing side of things. We had him on last year about this time frame, episode number 30, and then even this spring, episode 61. So go check out those episodes. Good value there. And you can kind of listen more about Zane's background then. But also just really glad to have Zane on this episode today. So welcome back, Zane. What have you kind of been up to lately? And kind of give listeners a bit of a refresher about your background.
Yeah, no, again, I appreciate you having me on again. I'm always enjoy doing it. Of course, probably like everybody, we're just at the beginning of school again. Just like you and I were chatting. So going through those motions of getting everybody back to some type of routine and bedtimes and dealing with some of the emotions with the younger kids, and then back to, some of the sports school schedules.
Yeah, absolutely. It's, we kind of forget we talk about business a lot, we talk about marketing, but we forget about the other part of our lives that takes a lot of our time and energy, right? And that's the family. And that ultimately can kind of dictate sometimes how these conversations go based on what we're dealing with at home, right? So I think it's always important to kind of bring that back to that conversation as well.
Oh, absolutely. Really, at the end of the day, the things that we're going to talk about from whether it be crop insurance, operational, and marketing, the family side is really why you do it, I think. So it's always got to be in the back of your mind and be one of those high priorities there.
Absolutely. And that's a kind of a great comment. I mentioned this on the crop insurance episode we did last week with Landon. If you haven't listened to that one, go check it out. Really good value there. But as we dive into this conversation today, talking about the marketing side of things, I think it's one of those things that I think is very important for us to focus on. And I think it's every area of our business is important, right? But this one, when it comes to marketing, I feel like can really make or break your business. Not to put too much weight on Zane over there as the marketing advisor, but this one is one of those, especially as we go into the fall of 2025, for row crop producers especially, we're talking about some not very fun times. But within all the volatility, there can be opportunity as well. And I mentioned it last week, but I'll say it again. For a lot of the producers out there that are going to be thriving during the hard times, they're doing a lot of things right in their business. And this is one of the areas that they're not letting fall through the cracks, that they're doing the best that they can to market their crop at the best levels possible, or at least just take some risk off the table. So that way they continue to farm on and do what they love and enjoy, to kind of basically continue to manage that lifestyle that they have that we just talked about with raising kids on the farm and all that other fun stuff. So I say all of that just to kind of set the stage with this conversation today, that there's a lot of importance in having this conversation. And I appreciate Zane coming back on. This can be somewhat mundane, but there's always things that are changing. And that's what we're going to be talking about today. So once again, thanks for coming on the conversation today, Zane. And let's kind of dive into the meats of this.
Sounds good. Yep. And appreciate it. And here we go.
All right. So we're going to be basically kind of building upon that conversation from last week when we talked about crop insurance, but now let's flip this to kind of the marketing side of things, right? We're trying to see what we can get for the crop that we're producing, and we go out and we produce the crop and we do such a good job. So talking about the markets, let's kind of give us some updates here. We're going to kind of dive into that. And then we're not going to just talk crops. I feel like we spent a lot of time on the crop industry lately and that focus. But we don't even kind of mention the elephant in the room, so to speak, which is cattle sometimes, right? So we are going to dive into the cattle market a little bit. So hopefully that'll be to lighten up the conversation towards the end, to end with some positivity there with the cattle market. But to kind of cover different areas. So let's kind of dive into it. let's kind of talk with the corn market, and we'll talk about the bean market and go from there.
Yeah, you bet. So we're about 2 weeks removed from the last USDA report. That USDA report in itself was pretty bearish on the corn side, a little more friendly on the soybean side. So since then, we're going to fast forward to today. We've had a nice rebound in corn and soybeans. As of this morning, December corn was trading right around 406. So just a couple days ago, we did actually run up and we topped out right around 416, which I was kind of running into some chart resistance at the 50-day moving average. The soybean market is just below 10 and a half, or give or take 10 and a half. Again, as we're kind of chatting, over the last few weeks, 1070 has more or less been the top side of that November contract and where it's traded. We topped out here just in the last few days closer to 1060. Again, we're not far off from those levels right now, but more or less the soybean market over the last few weeks or months hasn't moved. To be in a 70, 80 cent range for the soybean market is super stagnant. Slight positivity with the announcement of a Chinese official coming to Washington, D.C. Hopefully something positive comes from that. But with the soybean market right now, I would assume the perspective from your traders side, yes, we had a fundamental change, tightening of the balance sheet on soybeans. Hence, we've seen the funds cover a lot of their shorts, which as of last Tuesday, I guess they're relatively flat now or neutral. But to see an extension of this rally or recovery, I think we're going to need, China probably needs to come to the table on trade. But as of now, that's absent. And they're continuing to lock in their needs for the coming weeks and months from Brazil. So the thought of getting some type of Chinese demand on the soybean side in the short term probably is more on the unlikely side, unfortunately. So we might see that soybean market still kind of waffle, kind of in these levels unless we have some higher level announcement and at some point we're going to get some type of surprise one way or the other announcement headline that will create a bigger reaction in the market. But we might be a little more stagnant or a little more, the rally from these levels might be a little harder earned at this point.
Right. And I'd say that harder earned rally, that kind of sums it up with soybeans. And like I said, I'm not going to try to keep bouncing back between last week's episode, but we talk about, and you can kind of elaborate on this a little bit more, but from a crop insurance standpoint, from the spring discovery price that we had, soybeans really has not moved much. Corn, on the other hand, we've pulled back quite a bit, which is no surprise if you've seen where the markets have gone. So what are kind of your overall thoughts on that from the corn and soybean side? How much we've changed from spring discovery price and then even going to be going into fall discovery price before too long? What are some things you're seeing there?
Yeah. So again, you're exactly right as far as where the market currently is versus where it was at the end of February when we set our spring prices. Looking at corn, again, obviously we got a difference in balance sheet situation, corn versus soybeans. The corn market, again, we're sitting just right above that $4 level. Over the last 5 years, again, the one positive thing that hopefully this prevails, but on average over the last 5 years, we've seen our corn low in August. We went and hit that low 392, a week or two ago in that D-Sport. Hopefully that holds. And again, if you start to understand kind of some of your typical retracement levels post-harvest and with all that carry in the market, you kind of change your mentality from seasonal, okay? So, pre-harvest, your April through July thought process of proactively marketing grain to now you're thinking yearly or annually. And that comes down to, again, understanding typically what you kind of see from a percentage on retracements, your carry in the market, what that means to you, and then just hitting some of those points of what that means to you logistically, what it means to you from a cash flow standpoint, what the actual cost of storage, elevator storage means to you, factoring in your interest situation. So again, now is that time on all grains to have a good understanding of what you need to happen operationally. So you're not in the middle of harvest and floating by the seat of your pants, because that more often than not, that becomes an emotional situation when we don't know what our next card to play is. Even if your action item is to have no action, again, that's fine, but understanding that that is your plan, okay, that is card laid today, but then understanding your different routes from there. Okay, if variable A or variable B happens, what am I doing? That way, again, and hopefully eliminates some of that emotional in that situation because we could have a market that trends lower, we could have a market that trends higher for whatever variable, but understanding what that means to you and how you're going to react to it or how you prevent something is important today to at least have that forward thought a little bit again, because we're wired as humans, right? A lot of human emotion gets involved to try and bypass it as much as you can to have business like decisions.
I think that's really good to think about, where we've come and then having, like you said, those next cards to play. So, thinking back because we've pulled, especially on corn, pulled out so much off of that spring discovery price, you know, in that kind of decline, have people still been pretty active with their marketing and still trying to hit those seasonal windows? And even kind of same on soybeans, since we've been pretty flat there, have people still tried to be, from a marketing standpoint, been sticking to their plan? What have you been seeing there from the seasonal window standpoint?
I would say as a whole or 1,000, probably a general view, even your most proactive, disciplined people, I would say generally speaking, are a little bit behind. I think part of that came also from trying to have an understanding of one crop insurance, if they took ECO, and then also having an understanding of the farm program and what that meant to their farm. Right or wrong, I think some people, it's important, again, to understand all your revenue streams. But I think that potentially was part, the market being really flat, but also understanding that there are other revenue streams coming, especially with the changes, from the big, beautiful bill raising some of those prices on PLC and our county. Having that understanding of what that revenue means to you also is a little bit of a safety net for your operation. If that was, quote unquote, enough, then I think that also pared back some of the sales. Because if you really, really get down into some details at these levels, let's say you took ECO, obviously you have a farm program election, which we're going to get the higher of the two, PLC or our county. That is, one of the changes that was made within that big, beautiful bill that, that came out in July. And let's say, and then you take into factor how you're sold or how you're hedged. There are scenarios that if the market goes up 20 or 30 cents and you're hedged at a certain level and you have all these products, you could have a lower revenue overall to your farm versus, at 420 versus the market being at 380. And so having that complete understanding of what all these revenue streams mean to you, because again, your farm program payment is based upon your base acres, not planted acres. So they have some disparity or spread between what, if you planted 1,000 acres of corn, but you only have 700 in base, that could make a significant difference within your decision making. And we've developed some different what if scenarios and charts that bring all that together to give you at least a reasonable idea of what that could look for you or what kind of situation you're in. So I think part of that came into play of also that on what I'm saying, a lower percentage, specifically on the corn side. The soybean market just being so flat, I would say the soybean side at this point in time is probably about on par for history on percentage, I would say, especially now that we've seen just a little bit of strength in that bean market here recently.
Sure. And then I guess since we're talking about beans, to start the year off, there was just no optimism about beans. Nobody was excited to go plant them because they're just a lot of times it was before, the prices were below our break evens, right? This didn't really even give us many opportunities to try to even be profitable on the bean side of things. I mean, now in our neck of the woods in Northeast Nebraska, does look like we're going to get a decent crop out there. So hopefully from a yield standpoint, that's going to help. But from a bean standpoint and marketing, what's been kind of the sentiment of producers as you've been working with those as far as still trying to make forward sales, still trying to be religious, not even religious, but just kind of sticking to a plan even when we're below our break evens? What have you been kind of seeing from that standpoint?
It is a tough scenario to be in because again, if you're looking at all these projections and cash market's at 10, but your projected break even is at 11. So to go and make a cash sale or set futures price where there is no flexibility, that becomes a tough thing to do, knowing that you're locking in a loss. So it comes down to, again, operationally of quote unquote, again, risk management, right? I understand the type of level that I am at. I can manage that within my overall picture, right? I'm seeing X on corn, I'm seeing Y on beans, and then I have a cattle side, right? What does that look to me as a whole pie? Trying to maybe look at it more conglomeratively because that soybean side definitely is tough right now. I think we're going to get, I mean, the way it looks, the U.S. Deputy Secretary just announced, I think this week, and I don't think there's really any details about it, but along with, the farm program payments not coming for more than a year from now, potentially some emergency financial assistance that could be thrown in there as well. Not that that should change anybody's marketing plan and, having to rely on government type situations. But that is one thing to kind of keep in the back of a person's mind from a P&L standpoint, that it seems like ag has been taken care of from this presidency historically. Appears that they're out there going as well, but managing your quote unquote break even side for a crop that just looks dismal and a lot of red right now. You just have to probably think about your principles. If you're a person that discipline sells on strength, just continue down that path, especially if you're not going to store anything past harvest. And then you got to get creative as far as ownership for long-term type situation. If you're hopeful, that there's some type of deal with China that's coming, but it might be a 6 month down the road type situation. Or you're just thinking about, I'm 29 years old, I'm going to be farming hopefully for the next 20 or 30 years, and I'm still long beans, but I'm long in the 26, 27, 28 crop.
Yeah, for sure. I think there's a lot of different aspects a guy needs to kind of really consider there. And side little comment here, recently went to an agronomic meeting, and one of the opening comments that was made, and it was trying to breed some optimism into the crowd, was, there's a pretty good chance that two things could happen. We could see crop prices go up, or we might see a payment come through from the government at some point. And like you said, this administration seems like they're going to be the ones that kind of help back us a little bit, which I definitely think is good. I definitely think is needed. My only concern there is from a management standpoint is that does allow us to somewhat, I'm going to tiptoe around this, but get lazy in our marketing side and our management side things. So with that, I still think we need to be proactive, which is why I think this conversation is still of value. So I did want to go back to talking about what other changes were there that kind of came out with the big, beautiful bill that's literally affecting our marketing standpoint right now.
So, specifically within the farm program side of it, PLC went from 420, the price point went from 427 to 442. On our county, it went essentially from 86% up to 90%, which from a price standpoint took it from 432 to 452. So that was, those price adjustments. I don't think this is finalized yet, but I think there's still talk of being able to update base acres, potentially retroactively. But I think that's, again, something that's still floating around, and I'm not 100% sure if that's concrete or not.
Right. And updating base acres, for those of you that don't know, like a lot of times the FSA farm programs that they have, the PLC, the ARC County, if they're going off of base acres, typically the base acres are a lot lower than planted acres. So that's where having a chance to update those would be a really good opportunity to capitalize on that for the future, right? And so that's also going to be a good thing. Now, I guess my next kind of conversation point was in our area, throughout the Midwest, we've been very blessed with good moisture. And I think we're going to have a pretty good crop out there, or at least according to the USDA, we're going to have a bumper crop, right? We're going to have really good yields. Whether that's right or not, we don't know until the combine rolls through the field. But generally what happens when you have a really good yield, which we want, it's going to affect our total revenue. And so from an ECO standpoint, from a crop insurance standpoint, from the program, different payments out there, are we still going to get a bit of a kickback there? Before we kind of hopped on this call, I watched Tredas, the video that you guys had sent out a while back, kind of alluding to some different metrics as to, hey, if we see X yield, X price, we're going to see X payment. I mean, there's a lot of different factors that we have to consider here. And that's kind of the big picture, kind of overall picture from this message is we really need to get to know, what do we have out there for positions? What do we have out there for crop insurance? What did you elect from a county-based standpoint? We can kind of dive into that. But what I'm getting at here, circling back around, how do we make sure that we know exactly what we have for positions And if we've got good yields, how is that ultimately going to affect us?
Yeah. So there's, of course, within all that, there's variables that are unknown at this point, but you can make educated or reasonable assumptions. Or, if you, from a price standpoint, because again, that's obviously not known either. So within these programs, they take a marketing year average. So it's, there's percentage that's marketed each month. That's actually heavily weighted from September to January. Roughly 50% of the pricing happens September through January, and then the other half, the other 7 months of the year. So it's heavily weighted in that part of the year as far as how they determine that marketing year average that goes into your farm program. So as far as getting some more specifics within those programs, again, going back to base acres, your FSA office will have 156 forms that'll give you that information if you really want to dive into understanding what your base acres are. And again, within some of the changes that we had on the Big Beautiful Bill, you're going to get the higher of the PLC or our county payment if they are to happen. But like you already mentioned, whether it be ECO with crop insurance or our county through the farm program, they're a revenue product. So revenue is not purely driven off yield. It's not purely driven off of price, right? So if yield goes up and price stays the same, you're going to have less payment. If yield stays the same and price goes up, your payment stays the same, right? So again, you have a matrix, right? To kind of look at what if scenarios. If my yield is higher than the benchmark, but my price is 20 cents lower, what's that potential look like for my farm? So again, anytime it's revenue based, it's not super clear cut because you got two moving pieces there. So more than likely that we're going to have higher yields county wise, farm wise. Again, if it's more on your multi-peril side from a crop insurance standpoint, but even county driven type revenue products, we're probably going to have higher yields. So your effective price that you're thinking about in your mind is really going to be lower, to get you into some type of program payment.
Right. Right. And so that's, I think, where I was going with this was just kind of at the end of the day, we try to be proactive. You kind of alluded to it before. If you're proactive in trying to make some sales, maybe you kind of mentioned like the 420 level and we fall below that, all of a sudden now these different payments, these different programs out there could start to kick in. And all of a sudden we maybe get a run up in prices. And it just, either way, those scenarios, it's almost a little bit tricky and backwards from what we're probably used to because we're flirting with those different trigger price points. And like I said, there's two factors, the price and then the yield that we just don't know yet. But, depending on if you've got really good yields, like I said, you kind of alluded to it a little bit, but it makes it a little bit tricky from a marketing standpoint. And where I'm going with this is how do we just do the best that we can?
Again, I think it still comes down to, again, when you're bringing in multiple avenues of revenue, and I feel like, you kind of have constant changes, from government farm program type stuff. You have to have at least a reasonable understanding of what that means to you. I still think year in and year out, you need to have some very disciplined core principles of what your priorities are. And so the things that you want to happen and things that you don't want to happen. And you need to kind of move some of your priorities of how you're going to take action to prevent the things that you don't want to happen, right? But you have to be flexible within your thought processes because, again, our playing field is changing all the time as far as, again, where you might have some financial assistance, different yield aspects, Mother Nature. But those, again, a lot of those things are unknown. You can roll with the punches as best you can when the information is given. Again, instead of potentially, tiptoe around it again, being lazy and hope that there's some assistance coming, understand what these changes mean to you. Don't cross your fingers and hope that, we get lucky down the road from whatever variable. Again, put into place some of your basic core principles. Again, a little bit biased, whether it could be someone on your farm, could be your dad, grandpa, wife, that helps keep you disciplined to that plan. Because again, a lot of times, again, when we're making decisions, especially in highly volatile or fluctuating revenue type situations, price situations, things become emotional. But if you can find someone, again, that maybe is a step removed, or maybe just purely has the trait of being able to remove emotion from decisions, having someone like that in your corner, and again, it could be anybody, to keep you disciplined to those principles is highly important.
Absolutely, and I agree, and that's truthfully what I feel like a lot of farmers struggle with. We do get wrapped up into the emotions, and I'm just thinking through in this scenario specifically. Maybe we've got this doom and gloom going on in our mind going into the end of 2025 and into 2026. What we don't want to happen is for this thing to fall out and just to be completely unprotected, right? You know what I mean? And like all of a sudden exposed to thinking in our head, and this is the thoughts that we have is we're gonna lose our ass this year. What are we gonna do next year? And just all of a sudden these very negative thoughts. So all of a sudden maybe we make a move to go hedge all of our corn or the rest of our percentage of corn at a level that could potentially hurt us if prices go back up, or we think that it could go down, but what if prices go back up? I mean, we've got to be kind of realistic with that as well. So that's where, I guess, truthfully, that's where Zane's always been kind of good to rely on in our situation, because it is nice to have somebody, like you alluded to, somebody that helps remove some of those emotions and making those decisions going forward. So that's where, like I said, this is kind of an interesting time frame that we're in, but something that we also need to be proactive in making the best decisions possible.
Yep. No, I would wholeheartedly agree. Again, because we can make a lot of emotional decisions, but we gotta, again, I probably use this phrase too much, but again, know what your next card to play is. Because if we make some big decision today on making sales at these type of levels and the market does go back up or maybe go back up in a big way, 2020 I know was a weird year, but corn market had very similar pattern and we rallied almost $2. I mean, sometimes the market just does things, right? So we just, again, having an understanding of what that next step is, what that next situation, if we have this one thing happen, what am I going to do? Because again, otherwise it just accumulates on top of each other. And all of a sudden, it just becomes a thing that wakes you up in the middle of the night and gets just way more uncomfortable because again, our human brain is a very, very special and highly powered thing. But again, you can trick yourself into some super, super negative things, unfortunately.
Absolutely. And I think you just piqued all the listeners' ears when you said the corn market could go up $2, and that's we probably stopped listening after that. But the big thing there was just knowing that that is one card that what happens if that does happen? What card do you lay at that point? But also going off of hope is not a business plan as well. I mean, we hope that it does go up, but at one point, we got to build our foundational plan and kind of go from there. And so this is real quick. I wanted to dive into this, because we've had this conversation lately is maybe even looking at 2026 crop year already. Are people starting to market with that, with the thoughts of this corn market could go down? Sometimes a year out it doesn't move as much, which can be a benefit as well. What are you kind of seeing from that standpoint?
Yeah. So again, it falls still falling under a lot of just typical standard basic principles for individuals. If someone's typically marketing a year out roughly at this time frame, especially if when it in a year where there's a large carry in the market, it's definitely something that's being discussed. It's also, again, especially when you're using your own hedge account, you have a lot of flexibility between using hedges between crop years if something were to make sense. Like you already alluded to, with give or take a 50-cent carry from D's 25 to D's 26. If we do have a variable that comes into play that gives us some support on the front end, that carry is going to shrink, which means the back end, your D's 26 market is going up slower. So that potentially could be a position that you peel back into 25 if it were to make sense for your situation. That way you don't get caught in some big surprise variable, again, alluding back to 2020 a little bit, and the market runs away from you. And again, that way it's a little easier to quote unquote manage. But yes, you got to just keep your mind flexible, be open to different avenues, think through it though, because again, everywhere we look, obviously there is opportunity, but there's also a risk associated. So again, just having an understanding and not blindly doing things without thinking about different variables that could affect those decisions. Again, it doesn't need to be overwhelming. That's why, again, whoever that person is, you find someone that can talk to you unemotionally without creating too much excitement, and then work down those avenues of what makes the most sense for you.
Right, right. And I think flexibility there is key. I think that's going to be key. So I guess any additional thoughts kind of on the row crop side of things, the corn, beans, as we maybe kind of shift our focus to the cattle, the fun conversation?
I just say be prepared for harvest. Again, stuff you would have talked about in crop insurance, just make sure you have an understanding of what kind of production records you need to have. Have an understanding if you had any claims early in the year, what those percentage losses look like. Because as we get in the field, if you're seeing bigger losses, you want to have an understanding of what your adjustment was prior. That way you can handle it in the moment versus having everything out of the field and everything's too far gone. So having an understanding of what that looks like, have an understanding of your logistical and cash flow needs, just so you're prepared. I mean, again, we're not that far off from harvest in our area. It'll happen way before we're typically ready. So just have a little bit of forward thinking and preparation and planning for it.
Right. A plan can be flexible, but just at least having a plan in place is going to help us be more proactive as we get into it. Because, like you said, it always, even if harvest is late, it always tends to sneak up on us, right? For some reason, life happens, and talking about kids earlier on, school happens, activities, and everything else happens, and it tends to sneak up on us. So maybe just have that thought process, that plan in place ahead of time, going to allow us to, when those different things happen, when harvest finally starts and the emotions get high and when time gets low, maybe just try to tackle it the best that we can. So definitely good thoughts there. Just wanted to kind of shift to the cattle side of things. Let's focus on cattle. We don't have a lot of conversations around cattle. Probably in our operation, we've transitioned out of the cattle, so we're just not having those conversations as much. But a lot of different things that we can focus on. Now, little side context, I was talking with the local producer here lately. He did the right thing from a business standpoint with his cattle. They bought them right. They got them hedged so they could protect their downside and lock in some profit. But that was this spring. And as we know, things have changed a lot since then and it's ran up. And so now he's got all these margin calls to worry about and whatnot. And so let's just kind of talk about the cattle side of things. I think that's a very important aspect, like you mentioned before. We got to know what are our income streams. Let's not get just solely focused on row crop side of things. We've got cattle to worry about. We've got diversified operation. Let's kind of talk about this collectively as a whole. But what do you see from the cattle side of things as you're talking to different producers out there today?
Yeah, like you said, I mean, it's become a very hot topic. I mean, you're starting to see, Jim Cramer's talking about it, on TV. I mean, you're seeing a lot of people that aren't typically involved in ag start to comment on cattle beef prices. So, yeah, it is, like you said, it's a very known and big thing. And I don't really know what the right word is for the cattle market, in all honesty. But what it comes down to there is because you have such wild swings in revenue, capital requirements, whatever it might be. Again, having that forward thought of what my plan or intention is as I'm feeding and buying cattle is really important. Now, with what the market has done for someone that is a consistent hedger, like the specific example that you're talking about, having that conversation and plan with the bank is really important as well. Because again, you got a lot of people involved in that situation that are all humans and could be emotional about a situation. But I think if there's a clear understanding of what the plan is between all parties involved, it shouldn't be a surprise or it shouldn't be a huge issue. Of course, some people, again, in the short term, like as people are buying cattle, over the last 30 to 60 days of trying to replace it, that becomes even probably the more nervous part of it. I'm paying more for cattle, obviously, than I ever have, right? I'm replacing these cattle that I just, sold at the barn or the packer just bought them, whatever, if you're a backgrounder feeding them out. But so having, again, some type of plan. Now, is it, I do not want to hold the risk of losing $500 or $600 a head. So I'm in the thought of, I see $100 or $200 here. I'm automatically taking 50% risk off the table. That might be your plan. Your plan could be to do nothing because of purely the strength and trend of the market. And that could be just fine because again, that's, of course, been the right answer for weeks and months now, but it has to be a plan. It can't be I'm going to go buy cattle and just not think about it for a while and see what happens. Again, obviously, easily you can get lucky in those situations, but you don't want to have a very good turn or a good year and then have to subsidize the next year and a half off that years of income. You go from feeling on top of a mountain to being in a crunch and just creates a lot of unnecessary risk. So there's ways to still manage risk from a hedge standpoint that prevents the sharp break, to the bottom without having to outlay a bunch of capital and also not restrict your upside. There's ways of doing that. There's ways of completely staying out of the market but having something or a plan in place to, okay, you see some type of weakness, whatever it is, my next step now is I'm laying off 25%, not questioning it. This was my signal, done, right? Having that plan and make sure all parties are comfortable with that as well, right? Because again, in way markets like this, most operations or situations need some capital backing. Then again, everybody needs to be on the same page there so you don't run into, again, unneeded anxiety or stress or unknowns that it can be preventable.
Right.
Because there's also scenarios right now that you're thinking about. Obviously, you can't go out crop years in cattle necessarily. There's also opportunity to lock in a lot of money for coming years calf crops, but having a clear understanding of potentially how to do that and what that really looks like can be a little bit complex to a degree. But again, it's just having a clear understanding of why I'm doing what I'm doing and just having all parties on the same page. Because obviously these type of levels are generation changing, operation changing type financials. And it could be both ways. And unfortunately, probably will be both ways. When you have extreme moves in the market, even if on the front end it's very positive, again, unfortunately, on the back end of those type of cycles or markets, there's some unfortunate situations. So it's just making sure, again, that you have someone backing you, someone beside you, someone supporting you that is able to talk business like with you and has the ability to take a step back and remove some emotions and help lay out some type of plan and stay disciplined to it.
Right. Right. And I guess the thing that I want to echo there that I thought you mentioned is these are moves that are, like you said, generational. They could be impacting your operation for the next generation in a very positive way. But at the same time, I feel like right now, I don't want to say you can't go wrong in the cattle industry, but it's been foolproof here the last probably 12 months, let's just say. Like if you've bought cattle, whatever decision it is you made, you've probably made some sort of pretty good money, which in my opinion, going back to like I mentioned before, can cause you to be kind of lazy, right? Can cause you to be really reactive and just kind of sit back and let nature take its course to some extent, right? And so like in that, what I'm getting at here is it can really change from a management style. It can make us lazy and to be less proactive. Okay. And so like just mentioned, this cattle cycle, it's hard to say. None of us know this could last for the next 12 months. It could last for the next 3 or 4 years. We don't know, but at some point this is going to flip. And those people that do not create that plan and do not stick to it and get lazy could see that on the back end, take this up, all of a sudden operational positive move could be a generational positive move, all of a sudden being a generational negative move and really affect them on a negative way on the downside. So we don't know what's going to happen here, but I thought that was really interesting how you mentioned that. But then also going back to what you said on the crop side of things is knowing what you want to happen and knowing what you don't want to happen and actions needed to kind of put both of those in place.
Oh, absolutely. 100%. And like you said, again, trying to keep that human laziness out of us because of what the market can or maybe has created over the last few months. It's easy to happen. It's very, very easy to happen. So again, making sure again that you're able to stay disciplined on some type of plan, and at least again, I know I've said it a bunch of times already. Just this one nation will have an understanding of what your next card to play is. I am doing it, what it means to me, what these different avenues or outcomes could mean for the action that needed to be taken is.
Right, right. So then as we talk about the cattle markets, as we talk about some different things a guy can look at doing, what conversations have you been having out there? Are you putting on hedges? Are you trying to leave the flexibility open so you don't have such deep margin calls? Are you looking at like LRP using some sort of livestock or kind of insurance standpoint? What are the conversations that you've been looking like?
Yeah, it's a wide array, right? Having a conversation about all those tools is a part of every conversation. There are some that's bank-driven type decisions. There's some individual-driven type decisions of comfortability. I guess there's a lot of variables that kind of drive that. But again, if you're maybe have a little bit of a bias, I'm just hanging out with the trend. But again, I don't want to wake up surprised. Again, there's ways that you can do that within your hedge account and kind of continue to adjust. What I want to say is, your floor, your revenue level, you can continue to move that higher with the market. But again, you're not going to wake up and the market limit down 2 or 3 days in a row and have nothing in place and just be stuck. Again, if you're going out buying cattle, you're the person that more or less sells your cattle when you buy them. There's definitely a conversation that I'm still doing that to a percentage. Again, if you've been in this industry for a couple of decades and it's something that you consistently done, and you can look in the mirror and sincerely say that there's other variables to make this, but from a marketing standpoint, that's definitely part of the pie that has made me successful. We're going to keep going with that. But again, it's having a full, transparent discussion of what all those choices could mean to you. And then talking about, okay, if we do A, these are variables B and C and what they can mean to you. If your choice is B, okay, then variables A and C, what that could mean to you. And again, every operation is different. Every person is different. Preferences are different. So it's, again, just having full information, having good background, and at least have a basic understanding of what all these products are, and then being able to talk through them and responsibly, again, think through those decisions and what it means to you, and go with a route. And again, us as humans, if the market goes up or down, we like to use hindsight, but as much as we can, we're making a decision, we're moving on.
Yeah, for sure. I think that's really good. Now, I do want to take just a couple minutes, if you don't mind, because I think some people, when it comes to the marketing, and this could be the grain side of things too, but talking about the cattle, I'm curious, when it comes to the different strategies we have out there, say if we're comparing hedges, straight futures contract versus maybe some options contract, so we can leave maybe our upside open, because we talk about what we want and what we don't want. Well, we want to make as much money as possible without losing our ass, right? That's just kind of human nature. So from the cattle side of things, the few different strategies we have, we got the hedges, we got options, we got LRP, livestock revenue protection. And so from an option standpoint, using puts and calls, I'm curious, with the volatility we've had with the run up in the markets, are those some pretty good strategies to put in place? Or are they pretty expensive? I know a lot of people don't always like using those just because they don't understand them. I mean, maybe take a few minutes just to talk about that.
Yeah. So from a basic standpoint, you mentioned the word volatility. So within options, there is a volatility index that creates that value. If volatility is high, options cost more. If volatility is low, options cost less. So purely buying options when volatility is high can be a little bit of a tougher thing. So you got to kind of think through that a little bit. If there's another flexible route that I can go, I won't get in too deep in the weeds on what those thoughts would be, but there are different ways to utilize the volatility in your favor as well. Again, using LRP, of course, is a subsidized route. It is, again, you have no money up front for it. It is a very unemotional way to have a managed risk and a known number without having that daily or weekly reminder of, from a margin situation, right? You have no invoice for it the day you decide to do it. So that is an easy route to go. And again, like I said, every operation is different of what they're trying to accomplish. But also with volatility high, that does create higher cost of LRP because it's driven off of option values and, the CME market values. So again, historically versus what your volatility index normally is, LRP and options are more expensive in this environment than they historically are. Again, if you're the person that knows your margin, your projected margins, going down a route of flexibility may not be that important to you. Your flexibility might just come from the percentage that you are marketing versus the percentage that is open. Again, you might get a person that sees, okay, I have $200 a head profit projected. Okay, I'm laying off 25%. And I don't care about the flexibility because I have 75% of my pen or cattle that are unhedged, unsold right now. So it's thinking about the whole picture of, if I'm hedging 25%, I'm doing with flexibility, you really have flexibility on 100%. If you're doing nothing on that other 3/4 or 75%. So being true to yourself and the actual situation of what you have flexibility on, and at certain profit margins, if it's worth paying anything for flexibility.
Right. That tends to be our kind of drive home within these conversations, is talking about the flexibility side of things. And we got to be flexible. And our management and our options positions, our futures positions, we got to be somewhat flexible. and be willing to kind of, for lack of better words, move with the market, right? And so with that, I mean, I think that's really good conversation today, really good thoughts to really ponder on, especially on the cattle side of things. Anything else you want to mention from the cattle standpoint?
No, when you get in these wild markets like this, whoever that person is that you can kind of rely on to talk you through things, try and keep it unexciting. It's pretty hard not to right now in the environment we're in. But again, keep reverting back to some of the basic principles you have and the disciplines that you have. If it's going to be 30 days or 18 months or whatever it is when the cycle changes, but it will change. Just that way you have some understanding of what these values mean to you and what you're going to do. That way you don't have to wake up someday and look at the next generation and have that human emotion of regret. It will happen. Just be prepared to your best ability and try and stay focused.
Absolutely. Yeah. And then there too, I'd say the one thing, when it comes to a marketing advisor, and I saw this comment a while back on social media, so you know how well the comment is going to go. But, when it comes to working with the marketing advisor, they're like, well, they don't know any better than what we do, right? They don't know what's going to happen. And I'm like, yeah, you're right. They don't. I mean, for the most part, we don't know what's going to happen the next day, if Trump's going to do this or that or the other thing. We don't know if the cattle market's going to continue to go up or down. But driving home what you've kept mentioning is just having somebody to hold us in check to our plans, to keep us from being so emotional all the time, removing some of those emotions as best as we can. And that's where I think the value comes in with utilizing a marketing advisor or somebody else like we've talked about, right? So I do appreciate you being on today. Any kind of closing comments, any things to think about moving forward, and where can people find you so they can connect with you as well?
Yeah, no, I appreciate you having us on. Again, just go through your day, remember what's important. Every day is a gift, right? So again, enjoy it. Don't walk through your days with too big of a load on your shoulder, right? We got people out there for you. Again, I just keep thinking about, again, going back to school just starting, I guess, again, for myself personally, again, it's just an easy reminder the short amount of time that you get for the things that are important in life. So as far as finding us, again, Garrett, again, I appreciate you having us on. Our main phone number is 402-858-7501. That'll ring down to our headquarters in Lincoln. That is our general number down there. To our office, I'm over here in Lindsay, is 402-260-7572. We got locations in Lindsay. Headquarters would be Lincoln, Clear Lake, Iowa, Central City, Hardington, Nebraska, and Madison, Alabama. We have a website, www.gotrados.com. You're going to find, again, a lot of information on there about us as well. Different social media platforms, your typical Instagram, Facebook pages where you can follow us as well.
Right. And do follow them because they provide a lot of value in everything they post on Instagram and Facebook. There's a lot of value there to be had. And so go give them a follow. Once again, I thank Zane for coming on here today. Really valuable conversation. If you want to get in touch, you can reach out to them, reach out to me, and be glad to have the conversation as to even how Tredas could potentially help somebody else as well. They've helped us in our operation. Like I said, once again, that person to kind of remove some of those emotions and help us just do the best that we can. And I also appreciate you kind of bringing full circle in that we need to remember that why we're doing all of this, why we're working so hard, and why we're busting our butt trying to do the best that we can, right? Why we're doing all of that, whether it's for ourselves or for our families, for this short time that we get to experience all of these emotions, right? Just kind of keeping that in check as well. So thanks for your insight, and I appreciate you having me on today. Otherwise, we can catch you guys on next week's episode. Thank you. Thanks for tagging along with me today as we sharpened our mindsets. If you've gained insight from today's episode, be sure to take a screenshot to share or send this episode to somebody who might also find value in it. For more, follow me on Instagram @GarrettRuskamp or on Facebook, and join me next time for more conviction through clarity.